Good morning, traders. It is Tuesday, April 22nd, and I hope you all had a wonderful long weekend, Easter weekend. The market's been crazy on the background, and at least Trump has been crazy. A bit of an economic civil war is going on in the US as Donald Trump is making it personal towards Jerome Powell, the Fed chair, attacking him on Friday and again on Monday, calling him Mr. Too Late and a major loser. Dow plummeted some 950 points, and if you want to look at the charts on DJI, it's it's looking sad. Investors are now pulling assets from US to shield their investments from Trump. It's not looking good in terms of what's happening in US. It's affecting DAX here on our daily chart as well. We have to be also cautious on the economic releases today. On Tuesday, there will be more Fed president speaking economic data releases. Then again, on Wednesday, there will be US services PMI, manufacturing PMI, new home sales. That's a busy data release schedule, but nothing major scheduled today. But in these days, Trump is the major market mover because never know what he's letting out of his mouth, and a lot of things might occur from there. I had a bit of a travel going on since last Thursday, so I'm back on the charts today, and we're looking at our DAX daily chart here. Our range remains between the levels of 21,960 and the lower part is here at 20,961. So this is the big picture on the daily chart. What our double stochastic strategy indicates, the yesterday's attack on Powell might turn DAX down as well towards the end of the range, although I must advise that money is pouring now to the European market because of what's happening in the US. So never know, this might turn to be a positive on a short term. But as you know, the ones of you who have been with the channel for a while now, is that we don't day trade on this daily time frame. We understand the market sentiment and the overall economic situation and the price range where we take our trades further in the all the way to 5 and 3 minutes, and we drill down to 1 hour and 15 minutes here in a second. But we use this double stochastic, especially measuring the 50% line here, and it looks a bit exhausted here, but confused also. So whether to go up or down, they are separated, but on the climbing, they were climbing on the 50% level, both the fast and slow moving stochastic. If you haven't seen what this double stochastic strategy does and why I use it, you can view my original video here where I explain why this is so wonderful strategy for day traders, whether you're with commodities, indices, crypto, or day trading stocks. You can use this double stochastic strategy with everything. Okay, so let's drill down to the hour. If we can have the further levels drawn from here, we could see that this 21,537 is a key level to watch for, and perhaps around here we could confirm that the price gets support from 20,243 level. So this is the macroeconomic on the hourly time frame. Let's skip directly to the 5 minutes and further see what's happening here. The price is somewhat acting here on the 21,030 levels, finding support resistance, but it's needless to quite now start indicating any resistance or support for that. The oscillators are very much separated. This is what happens in the positive momentum, is that the slow moving stochastic with the values 66, 3 and 3 stays up high, pulls even higher or hovers here in our oversold levels, and the separation fails and the fast moving returns like a rubber band, pushing the prices even higher. This is not a big move here, but when they move together, it's a very good momentum for us traders to take our long positions. 5 minutes is already so slow for us intraday traders that when we get a position on 5 minutes with this stochastic strategy, it really gives us almost good half a day momentum relatively reliably to stay on the position for 3 minutes. Here is more of a scalping levels where you take these short snippets while the price is moving higher. You can use this with multi-time frame, getting your levels from 5 minutes and scalp on the 3 minute and 1 minute. However, I would like myself to stay on the 5 minute and look for the key levels from hour and 15 minute and then take the trades on 5 minutes. But the market has been so erratic some days that 3 minutes is the maximum that you want to look your positions. So I've been staying on my positions from anywhere 3 to 5 to 15 minutes, whereas 2 hours might prove the price to fail so badly that even a good looking position might turn to the worse within an hour or two. So 5 minutes is feels almost like a swing trading for a day trader like myself. But so today the economic releases are somewhat slow. Trump handles the economic releases and acts as a major market mover. So watch out for his Truth Social posts and whatever your local media, CNBC or Yahoo Finance, tells what's going on, or follow directly on his socials. But on the indicator tabs, you can use this double stochastic strategy to be confirmed on the market sentiment and where it is going on your respective time frame. Hey, welcome back, and it's gonna be a volatile week for sure. There's a lot of untapped potential for this week, as it's been a long Easter week, and so a lot of traders are returning to the market, and money is moving today. And on as Wednesday, it's the US services PMI, manufacturing PMI, and Thursday will be released the initial job claims, durable goods orders, and existing home sales again. So be on the lookout for drastic moves on the market, what the administration is releasing, and what the Fed has scheduled for data releases. And let's see how this violent name calling and personal attacks from Trump's side towards the Fed does to the markets. Be careful out there and trade smart, use this strategy. Leave me a comment and hit that like button to help the channel and other traders to discover this wonderful strategy and stop losing money and making money consistently and on daily basis on these markets. Hey, I see you tomorrow again.